In a financial world that's been bracing for sluggish growth, one currency is doing the unthinkable. The Australian dollar has been on an absolute tear against the US dollar in 2025. It's a rally that has caught Wall Street completely off guard. It's a pretty shocking surge, with the Aussie dollar climbing by roughly 4.59% year-to-date at its peak. Most people just see that headline, but they don't know the powerful forces driving it. Well, today, we are pulling back the curtain. It's a fascinating mix of central bank chess, global economics, and a good old-fashioned boom in the things we pull from the earth. What is really going on here? This isn't just a random blip on the screen. It's a story of major economic forces colliding. We're going to break down the three key drivers behind this unexpected rally. We'll look at how decisions made in Sydney and Washington are creating a huge currency shift, how Australia's natural resources are flexing their economic muscle, and the sleeper factor that's giving the Aussie an extra boost. All right, first up, the central banks. A huge part of this story is a tale of two very different game plans from the Reserve Bank of Australia, or the RBA, and the US Federal Reserve. Think of global money like water writs, always going to flow where it can get the highest return. In 2025, the US Federal Reserve has been signaling it wants to cut interest rates to give its economy a boost. When US rates go down, it makes holding on to US dollars less attractive for big investors. I mean, why keep your cash in an account with a lower return? Meanwhile, down under, the RBA has been a lot more cautious. While it's trimmed rates, it's also been staring down some stubborn inflation, which suggests it won't be as quick to make future cuts. This gap, what the experts call the interest rate differential, makes the Aussie dollar look much more appealing. Global investors are chasing those higher returns, moving their cash into Australian assets, which cranks up demand for the Aussie dollar and sends its value soaring against the greenback. The second powerful force is something that's baked into Australia's economic DNA: commodities. The Australian dollar is often called a commodity currency for a reason. Its value is tied directly to the prices of raw materials Australia ships to the world, like iron ore, coal, and natural gas. And throughout 2025, global commodity prices have been strong. When companies overseas need Australian iron ore for steel or natural gas for energy, they have to buy them with Australian dollars. So, when resource prices are high, it creates massive demand for the AUD on the world stage. It's a basic supply and demand equation. More demand for the Aussie dollar means its price, the exchange rate, goes up. It's a direct pipeline from Australia's mines straight to the strength of its currency. The third reason isn't just about Australia's strengths, but also about the unique headwinds facing the US dollar itself. A currency's value is always relative to others. And the greenback has had some challenges that make the Aussie dollar shine a little brighter in comparison. For much of 2025, the US dollar has been weakening due to concerns over slowing growth and unpredictable policy. Analysts have pointed to US-centric issues, like political uncertainty and the looming risks of government shutdowns, which can shake confidence in the US dollar. When the world's main reserve currency shows even a hint of instability, investors start looking for stable alternatives. And with its resilient economy and strong financial footing, Australia has become a go-to candidate. So this isn't just an Australian rally. It's also a story of shifting global sentiment, where the Aussie is benefiting from being seen as a safe and stable harbor. So, what does a stronger Aussie dollar actually mean for everyday people? The impact is probably more direct than you think. For starters, planning a trip to the United States? Good news. A stronger AUD means your money goes further when you swap it for US dollars, making everything from hotels to that shopping spree a little cheaper. And speaking of shopping, those things we import from the US, from iPhones to Nikes, could start to see price drops. As our dollar strengthens, it costs Australian companies less to bring those goods in. And hopefully, they pass those savings on to you. But there's always a flip side. For Australian businesses that sell their products overseas, a stronger dollar makes their goods more expensive for their international customers. This can put a dent in Australian exports and affect the jobs that rely on them, creating a tricky economic balancing act. So, there you have it. This surprising surge isn't some random market fluke. It's a powerful cocktail of opposing central bank policies, a red-hot commodities market, and a global mood that has become a little wary of the US dollar. Each of these ingredients is playing a part in one of the most unexpected financial stories of the year. Understanding these forces is the key to making sense of the economic world around you. If you want to stay ahead of the next big economic shift, do yourself a favor. Subscribe and hit that notification bell for more insights. Thanks for watching.